Hey, do you feel like your company is paying for more than it's aware of?
Yeah!
Does your company tend to pay for more small items than your company expects?
Yeah!
Then this easy-to-use video is the way to answer all of your company's overhead allocation questions. For 7 easy payments for $19.95, you can purchase this video that will demonstrate and show the many ways on how to reduce the overall extra cost for your company.
We will also explain to you the process of assigning manufacturing overhead to specific jobs and recording overhead in various accounts. This information will help you organize your money that will make your company more successful.
The first example we will introduce is the definition of overhead as well as overhead allocation rates. Overhead is all materials other than direct labor and direct materials, which include indirect material and indirect labor. The overhead allocation rate equation is overhead cost divided by allocation base. For example, suppose a company had $40,000 of overhead cost and used 20,000 labor hours during the year. In this example, an average actual overhead cost per labor hour would be $2. Oh, I'm sorry, I didn't see you there. Overhead costs are allocated to jobs by means of an overhead allocation rate. The rate is calculated as the ratio of overhead costs to activity. Common measures of activity include direct labor hours, direct labor cost, machine hours, and direct material costs. These are all examples of what a cost driver may be.
In this next example, we will introduce to you overhead allocation base. Is your company labor intensive or machine intensive? Whichever has a greater influence on your production, you should consider as your allocation base. For example, if your company is labor intensive, there is more use of labor, which is hands-on use, to produce the product. If your company is more machine intensive, your company will use more machine hours to produce the product. Keep in mind that jobs with greater quantities of an allocation base will receive larger allocations of overhead.
In many companies, some overheads are created by a variety of factors. Allocating on only one allocation base may disfigure product costs. When using activity-based costing, one must know the major activities that create overhead, and these activities are grouped into cost pools. Multiple overhead rates are calculated by dividing the amount of each cost pool by the measure of its corresponding activity, or cost driver.
Now we will discuss predetermined overhead rates. The overhead rates are based on estimates of overhead costs and estimates of the level of the allocation base rather than on actual costs and quantities. For example, management estimated that $100,000 of total manufacturing overhead will happen within this year, and my company requires 24,000 labor hours. You get the predetermined overhead rate by dividing $100,000 by 24,000 hours, which will give me $4.17 per labor hour.
My estimated overhead cost was $800,000 and my estimated allocation base was $40,000 in labor hours, making my overhead rate to be $20. At the end of my accounting period, my actual overhead cost was $890,000 with 44,500 labor hours. Therefore, my overhead was $90,000 under applied. The difference between the overhead cost applied to work in process and the actual overhead cost of a period is termed as either under-applied overhead or over-applied overhead.
So, these steps and examples in our guidelines are ways to make your company more successful. Configure your predetermined overhead rate, which is your estimated total overhead cost divided by estimated allocation base. Then, at the end of your accounting period, determine your total overhead and compare it to your actual to tell whether you've over or underapplied your overhead for the product.
So with these 7 easy payments of $19.95, we will show you the steps to learning all about overhead allocation with more details than ever before in our new and improved guideline. But make sure you always remember,
You get what you measure! Like, maybe we could switch up the scenes a little bit so it won't be as...